Welcome to the Tesla Daily News. This podcast is created by Generative AI. Today is January 3rd, 2025, and we're diving into the latest updates on Tesla's performance, challenges, and future outlook. As always, links to all the stories we discuss can be found in the episode notes. Tesla has reported its first annual sales decline in over a decade, with 2024 seeing a 1.1% drop in global vehicle sales. The company sold 1.79 million vehicles, down from 1.81 million in 2023. While the last quarter of 2024 showed a 2.3% sales increase, thanks to incentives like 0% financing and low-priced leases, it wasn't enough to offset weaker performance earlier in the year. Analysts attribute this decline to slowing EV demand globally, fierce competition from both legacy automakers and newer players, and Tesla's aging model lineup. The Model Y and the limited appeal of the Cybertruck have particularly struggled to maintain momentum. Tesla's average sales price fell to just over $41,000, the lowest in 4 years, which has put pressure on profit margins. Analysts are urging Tesla to introduce more affordable models to attract mainstream buyers, as the early adopters of EVs already own their vehicles. Meanwhile, competitors like BYD in China are thriving, with BYD reporting a 41% increase in sales for 2024. Tesla's stock reflected investor concerns, dropping 6.1% after the announcement. To regain its footing, Tesla may need to diversify its offerings and appeal to a broader audience. The Cybertruck, once a highly anticipated vehicle, has faced disappointing sales figures. Despite over a year of production, Tesla has delivered only about 40,000 units, with just 9,000 to 12,000 sold in the last quarter of 2024. Initial excitement over 1 million reservations has waned, as skepticism grew around the low $100 reservation deposit. The production model has been criticized for being more expensive and offering less range than promised. Tesla has introduced discounts and incentives, including eligibility for a $7,500 US tax credit, but analysts remain doubtful about the Cybertruck's future. Tesla's ambitious production goals of 250,000 to 500,000 units seem increasingly out of reach, with some experts suggesting the Cybertruck may have been a strategic misstep. Tesla's Q4 2024 vehicle deliveries fell short of expectations, coming in at 495,930, below the analyst estimate of 510,400. While this marked an increase from the previous quarter, it wasn't enough to prevent Tesla's first annual sales decline since 2011. For the year, Tesla delivered 1.78 million vehicles, missing its target of 1.8 million. The company attributed the shortfall to increased competition, shifting consumer demand, and global economic challenges. In contrast, BYD delivered 4.3 million vehicles in 2024, with 1.76 million being pure EVs, nearly matching Tesla's numbers. Despite these setbacks, some analysts remain optimistic about Tesla's future. Wedbush analyst Dan Ives predicts a 20%-30% growth in deliveries for 2025, driven by the anticipated launch of a lower-priced EV and increased adoption of Tesla's full self-driving software. While the recent numbers have raised concerns, there's still confidence in Tesla's ability to innovate and recover. In a separate incident, Tesla's technological capabilities came under scrutiny after a Cybertruck explosion in Las Vegas. The incident, which occurred outside the Trump International Hotel, prompted law enforcement to seek Elon Musk's assistance. Musk provided access to the vehicle and shared video footage from Tesla charging stations to help track its location. While this cooperation was praised by law enforcement, it has reignited debates about privacy and ownership. The ability for Tesla to remotely access and control vehicles raises questions about the balance between safety, surveillance, and personal property rights. Lastly, Tesla's energy storage business continues to grow, with a record deployment of 11 gigawatt-hours of energy storage products in 2024. While this is a bright spot for the company, the challenges in its core automotive business remain a pressing concern. Analysts argue that Tesla must adapt its strategies to maintain its leadership in the increasingly competitive EV market. The company's high valuation, with a PE ratio of 103.2, has also come under scrutiny, with some suggesting it should be more in line with traditional automakers. That wraps up today's episode of the Tesla Daily News. Tesla faces a challenging road ahead, but with innovation and adaptability, the future remains full of possibilities. Thank you for tuning in, and don't forget to check the episode notes for links to all the stories we covered. See you next time.